Welcome. In this video, will the Zbcn coin giant rise come? We will analyze it. Don't forget to subscribe and like, and please watch to the end to understand. A significant structure has started to appear on the chart, and that is this downward sloping trend line. So far, the price has touched this sloping resistance line several times, reversing direction each time afterward. This shows that the trend line is being taken seriously by market participants and is acting as a strong technical barrier. However, although this downward trend has so far suppressed the price, the current technical structure and increasing momentum indicate that a breakout may now be very close. In the markets, trend lines, especially those with multiple points of contact, are vital for determining price direction. When these lines are broken, investor sentiment often shifts as well. When a downtrend is broken, previously cautious buyers gain confidence and re-enter the market. This can lead to increased momentum and spark a strong upward movement. At this point, the current technical landscape signals that we may be on the verge of such a breakout, and it warrants close attention. Breaking this downtrend would not only signify a short-term recovery, but could also mark the beginning of a medium-term uptrend. The more frequently the price approaches and holds near this resistance line, the more likely a breakout becomes. In technical analysis, repeated testing of a resistance level is often an early sign that it is weakening and may soon be breached. Moreover, if the price is reacting more strongly with each approach, it suggests increasing buying interest and that a breakout may be just a matter of time. Breakouts from trend lines are often accompanied by large trading volumes. Many investors prefer to open positions once such significant technical levels are broken. Especially with algorithmic trading and large market players, these decisive areas can lead to rapid upward price movements. Therefore, if this downtrend is broken, it's likely to be more than just a typical price move. It could trigger a substantial rally. Surpassing this level would restore confidence among investors and bring new energy to the market. Looking at the current technical structure, the downward pressure above the trend line seems to be weakening, buying interest from lower support levels is strengthening, and a recovery in volume is supporting this shift. This suggests the price no longer wants to move lower and may be preparing to shift upward. In this context, breaking the downtrend would not only be a technical signal, but also a clear sign of a shift in market sentiment. Especially after a break of this downward trend, previously tested intermediate resistances could be passed more easily during the price movement. The breakout of such strong resistance levels creates new buy signals for both technically driven investors and algorithms in the market. These signals can create a domino effect, pushing the market upward. This kind of breakout can reignite hope for investors who lost confidence during long periods of decline and draw them back into the market. Looking at previous examples, we see that prices breaking similar downtrend structures have often experienced sharp rallies afterward. These examples highlight how important historical repetition is in technical analysis. Historically, the break of such downward trends is viewed as a moment when investor confidence is being reestablished, and the market is preparing for a new upward wave. Therefore, a similar scenario is very possible in the current case, and the technical data supports this possibility. In summary, this clearly visible downward trend line on the chart is currently one of the most critical technical levels in the market. But we can't base our analysis on trend lines alone, so let's take a look at the other metrics as well. Stay tuned. When looking at the chart overall, a notably distinct pattern in past price action stands out. After a sharp and decisive downward move, the price stabilized at a certain level, entering a sort of breathing and balancing phase. During this period, the price fluctuated within a horizontal range, forming a consolidation structure that reflected market participants' indecision. However, at the end of this sideways period, a strong upward movement began with significant momentum, and the price gained considerable value, providing profits to investors. This situation represents a classic example of a post-consolidation breakout in technical analysis. There is a clear similarity between that past price pattern and the current chart. Once again, following a prior downward move, the price has seemingly entered a resting phase and is now moving within a narrow horizontal band. In other words, the market is digesting the previous volatility and gaining time in search of a new direction. These types of sideways movements are often considered preparation periods before major price moves. Much like the calm before the storm, the market gathers energy before making its next big move. During such horizontal phases, investors are typically in a decision-making process. Buyers and sellers are trying to gain control, and the market moves in a state of balance. The most important thing to watch during this period, as seen in the past, is that such horizontal consolidations often lead to directional, high volume, and impactful price moves. Just like before, if this sideways structure breaks to the upside, it could result in a meaningful rally. From an investor psychology perspective, this setup is also significant. Especially experienced investors who remember the previous rally that followed a similar pattern may be more willing to shift to the buying side, expecting a similar outcome this time. This expectation creates a positive atmosphere in the market and leads to increasing buying pressure. This provides key psychological support, making an upside breakout more likely. From a technical standpoint, breakouts to the upside following a sideways move are typically strong and sustainable. During the sideways phase, energy and potential build up in the market, which are released suddenly at the breakout point. This causes the price to rise quickly, often surpassing previous resistance levels. These breakouts also encourage other investors to act, and as more technically inclined participants open positions, volume increases further. This chain reaction helps fuel the rally. One notable sign is the decreasing volume during this sideways phase, indicating that the consolidation is nearing its end and the price is getting ready to make a significant move. Volume usually increases again at the moment of the breakout and confirms the strength of the move. The current chart appears to be very close to this scenario. The previous major rally also began with a sudden spike in volume after a low-volume sideways phase. So, the current setup resembles a reflection of the past. The price is once again in a pause phase and is visually forming a similar pattern. This supports the concept of history repeating itself in technical analysis. When similar conditions arise, structures that worked in the past may become effective again. That's why it's important for investors to keep a close eye on this horizontal range. Additionally, the potential accumulation taking place during this period should also be considered. Accumulation refers to a phase where large players keep the price within a certain range while building their positions. These periods are often followed by strong moves as major players become ready to push the price in their desired direction. One of the most important technical signals on the chart is the structure that is about to emerge on the MACD indicator. The MACD is a tool that many traders carefully follow, as it provides powerful and reliable information about the market momentum. The pattern that is currently prominently visible on the indicator could be a harbinger of a very promising price action. The MACD lines are currently in the area below the zero level, but they are converging and preparing for an upward crossover. This is considered an extremely positive signal in terms of technical analysis. In particular, the MACD line crossing the signal line upwards indicates that the market momentum is starting to turn from negative to positive. It is also noteworthy that this crossover occurs below the zero line. This is because such an upside cross below the zero line usually indicates that it is still early in the trend and that bullish potential is just emerging. This gives traders the opportunity to take a position at the early stage of a potential uptrend. With a break above the zero line, it is quite likely that the uptrend will strengthen further. MACD crossovers are important. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments. Analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.